Today we got David Franecki here with us, and he's the owner of Capstone Capital USA. Very prestigious investor, been investing for about, 40 years now, a little bit over 40 years.
I've been in notes. I've been in notes since 2013, but I've been
Okay,
doing real estate since 1978.
there you go. You started in Cincy, Ohio, and moved to what, Portland, Maine, and then now you're making it happen in Phoenix out there, right?
Right, right, right.
So, yeah, talk a little bit about, I guess, some of the success you've had. I mean, you've done what, over 900 REO broker deals in Phoenix during 2008, 2014. I guess when the market was crashing, and then, like you said, you got into note investing here in 2013, which what we're going to talk about today. And so let's talk a little bit about, I guess, how you got started with the note investing and kind of what your sweet spot is. I think you're in your first, right? You're a first investor and kind of more of a
Yep,
set and forget it type of guy. So
yep.
let's talk a little bit about that.
So as RIA is the local RIA here in Phoenix, Arizona Real Estate Investors Association. So Eddie Speed came and did his dog and pony show for Note School in 2012, December. And then he did a follow-up in 2000, January 13. I went in like this. It was cold in that building anyway, but I was not about to buy anything. About the time it was over, my hands were down and I was open.
Right.
And what I saw is I could be the REO guy, the asset manager, and then work with the others, the agents, if you will, and they would manage the notes for me if it was going to be non-performing.
Okay.
And then I evolved to more performing because I wanted quantifiable returns.
I got you. So let's talk a little bit about, you know, your typical, I guess, investment for your buy and hold side. I mean, I think we were talking about last week a little bit how crazy the market is right now. People are, just to date, this is October 2021. People are kind of buying anything out there. On my side of the business, I sell a lot of notes, so people are buying stuff. But from your side, I mean, typically when you're buying anything in real estate, you make money when you buy, right? So, I guess talk about your typical deal that you're looking for when you want to buy a note.
I'm not buying anything now by design. I'm more rebalancing my portfolio
Okay,
and taking advantage of the high prices that are out there now on my resales. Okay.
sure,
And I think I didn't buy a lot last year, and it was all, if it wasn't worthwhile, I wouldn't do it because the numbers just got too stifling. I could not justify buying them.
sure,
And if the loan to value and the investment value wasn't there, I walked. But it's just all this craziness in today's marketplace. I'm not going to be a participant. I'll be a seller, but I'm not going to be a
right,
buyer unless it's on my terms and to get my yield that I want. I'm not going to do it.
sure. So what would be your typical deal though, like in a normal market? What, 40% equity, or what are you looking at
Oh,
to
I
purchase
wouldn't.
a
Yeah,
note?
unless there's a good. Yeah, that's fair. So if let's go on today. If you're buying, and I haven't done this, but this is my model, and this is what I teach when I talk to others. Let's say that you're going to do a seller carry. Okay. If the house, so in Phoenix today, houses have popped 32%. That is artificial. It is not real. You want to get caught without a chair, buy that. Okay. So a friend of mine, Greg Sharp, he's a pretty seasoned cat. His model is, and it made sense, and frankly, I was doing it. So if a house is worth $100 today, I'm going to take 20% right off of that, and then I'll do 80% of that for a loan to value. That's it. Cut and dried. Very not fancy. And because I feel, and again, the people that I work with feel that it's all artificial. When you got BlackRock buying everything in sight at par or market value, and they're being funded by the Fed. And if it goes south, the Fed will just forgive their debt. They don't care. I can't compete with that. So I got to protect me and my
Sure.
investor.
Sure.
So to that point, that's my model. Now going back to 14, 15, whatever, I started non-performing and went to performing. But again, my model was the same thing there, 60% or so loan to value. I felt very uncomfortable at 65%.
Hmm.
Investment to value below that. But it was all little stuff. It was all the leftovers from the '08 crash that the hedge funds were selling. So they were all small deals, 20,
Right.
30, 40 grand, not a big deal. And they were all over the country. But again, it was CYA. It's going to happen again. History does repeat itself. And I'll let somebody else be caught without the chair. Does that answer your question, Joe?
Yes, it does. Yes, it does. So I guess, yeah, so sure, let's talk a little bit about that. I mean, obviously, you're a safe investor, and that's where you want to be. But I mean, what do you think is going to happen, I guess, with the coming market? You've been around a long time. I know, like you said, only been doing notes for maybe, since 2013, but still, you've been investing in real estate since the 80s. So, you've seen a lot of stuff. You've seen the dot-com crash. You've seen the real estate crash. Um, you know, what are you, I guess, what are your 2 cents on current market predictions? You think the real estate is going to fall out, or inflation is going to keep creeping up? Because what I'm seeing on the buy side, I buy houses. I'm going to resell it on a note. I'm going to create that note. That's typically what I do with my business. And, the real estate prices just keep climbing, even for the smaller houses that I'm buying, 30,000, $50,000 range. And it's just unbelievable. Last year, it's like, at least gone up 25% in just 1 year.
Yeah.
So, and then is Phoenix the only area that you're investing in, or are you investing in all over the states?
I'm not doing anything in Phoenix now. I
Okay.
cannot compete. I can't
Right.
compete with the hedges. I mean, everybody and their grandmother in terms of investors are coming here, the big boys. They're
Right.
they're spending $2 billion. They're putting up 2 million square feet of commercial space. That's not me. The investors per se, the little guys like me, they can't make any money. They got to pay par. Makes no sense.
Right.
None whatsoever. Not going to go there. And yeah, there's 125,000 people moving here a year. That's great, but it props it up. It's all artificial.
Right. So
So
do you,
I'm investing in my note business. It's predominantly in the Midwest. I can't afford the West. I love Texas, but it's so competitive. Last year I did a lot of mailings to Texas. With the REI, did the REI reply follow with the text and the emails and all the other stuff. Couldn't compete. I bought, I think, between buying and brokering, maybe 7 notes, not a lot. But the ones
wow.
that I got are going to be killers.
Sure.
So
Sure.
the ones that I'm selling, again, back to your question, I'm selling one now. I went back to my partial buyer. I said, hey, do you want out? Yeah, I think I want to do that. So I'm buying those back and I'll resell those notes. And all those were 20 to 30% loan to value. Even now, some of those houses, when I bought them, they were worth 60. Now they're worth $180. They're not worth that.
Wow.
Not a prayer. Imlay,
Yeah.
Michigan, Warsaw, Indiana,
I know
and
Warsaw.
Elyria, Ohio never did pop, which is, Cleveland. So going
Yeah.
back to your question, I'm doing it all over the country. And I'm also so I spend a lot of time in Maine. So I'm also
Mhm.
building out a self-storage facility there now. That's predominantly where my interests lie at this moment in terms of focus. And I'm just waiting.
Mhm.
There is no rush for anything. None.
Sure.
If you try to do square peg round hole, you're going to get flayed.
Sure.
It's going to happen.
So you're seeing this competitiveness, I guess, all across the market for the most part.
Yep.
And like you said, you're buying back the partials that you sold to get the equity in the house back.
So I'm going to own those notes and then I'm going to flip them. And I'll be selling them at 95% of UPB.
Just like everyone
Matter of
else is
fact, a
buying
friend of
like
mine
crazy.
who you and I talked about, Kevin Shortell, he does a lot of mentoring. He was Eddie Speed's chief teacher, for lack of another term. And I talked to him a few days ago. I said, Kevin, I got these. He's been sending me buyers for my notes.
Hmm.
I said, Kevin, I got these 3. So I sent him the spreadsheet or the graphic showing different things. And he said, oh, this is cool. I've got a call coming up tonight. So he pinged me back yesterday and he said, you know what? I think I've got this sold for you when you're ready.
Wow.
So it's all little money. It's not killer deals, but I
Sure.
mean, I with the partials, I was reimbursed for my investment right away. So it was just
Right.
a tail hanging there. and now I can resell them because the market's up and not discounting them. I'm selling them at 95%. I mean, that's good.
That's yeah, that's insane.
My yield's going to be off the chart.
Right, right. That is unbelievable.
So
Um,
it's just a game. You got to
yeah.
understand your numbers. But again, as when you're buying a house, Joe, what do you do for due diligence? And if you screw up in your due diligence, do you get screwed?
Oh, sure.
Okay. Same thing with the notes. I have a certain format, and we had talked about, you and I talk about different things, and that format is on my YouTube channel. So it's either under Dave Franecki or under Capstone, and maybe you can put that on your notes after we get offline here.
For
And
sure.
people,
I'll put a link into it.
yeah. So it's either under Dave Franecki and or Capstone. There's probably 15, 20 YouTubes there, which includes my band of where I am, and then some other Note Investor Forum meetup videos there. But it goes over what I'm doing. I'm just cautious. And if you mess up on taxes, title, or the payer, you're toast.
Sure.
It's just the way it is. It's like clockwork. You can count on it. You can take that to the bank.
Right. So let's talk, I guess, a little bit about some of the trainings that you do offer. I mean, obviously you got your Capstone Capital USA. I think you guys do have some you know, training programs and that type of thing for investors who want to get started with you. Can you just touch on a little bit about that, what you offer?
Okay. What I'm working on now is more just kind of off cuff. So I've developed my own brand, if you will. People respect me for what I've done. Okay, that's great. It doesn't mean I'm great. It just means I've worked for it.
Right.
And I have that relationship with them. People are referred to me. And basically, what I'm finding for me personally now is that folks are referred to me saying, hey, Franecki can work this stuff out for you. So I have a friend in Houston, Texas. He bought a second through another mentoring program. You and I talked about this, I believe.
Mm-hmm.
And he paid a significant amount of money for this $25,000 mentoring program. And of course, the mentoring guy, he was out of New Jersey at that time. He helped him to find this note. He got hosed.
Yeah.
And I'm working that out for him. The notes in Illinois. It's probably a good second. I'm marketing that for him. Another guy, he was a dentist in Denver, and he got involved with a program that I came through, and they helped him to get 3 notes. He didn't know what he was doing. We got out of him, but that's my expertise now. I can use all this data that I've got up here
Sure.
and help people. That's my basic mentoring. If somebody were to get started, then I would go with the Kevin Shortell and use his program. And we can put the link to Kevin at the bottom of this program. And
Sure.
Kevin charges $3-4 grand what I paid 15 to 25 for, because I got 30-35 grand in mentoring fees plus whatever. But
Sure.
so it's the same teacher. It's just that he's now on his own. He doesn't share it. He does a phenomenal job. So it depends upon where the individuals are. If they're new, I'd go Kevin, or go with Tracy Rui at Diversified Investments. If they just want to do some workouts and get out of trouble on a bad buy, I can help them with that.
Okay. Sounds awesome. So, so basically, kind of like you saying, I mean, long term strategy. You're right now. You're working on self-storage facility, kind of waiting just because the market's crazy. I mean, do you think the market's going to take like a massive dip, and then people who are kind of sitting back and being cautious are going to be able to clean up, or you just have no idea until it happens, right?
The can's been kicked down the pipe for a long time. The feds
Sure.
keep pumping. We're going to have a reset. It's going to happen. At my meetup, we had a guy named Stan Harley, the Harley Market Report. And Stan is a prolific stock guy. He works with the Fibonacci curve. You can look at it's basically on cycles. Whether it's a
Right.
stock market or whether it's real estate, they're totally entwined, one way or another. He was saying 3 years ago, and then again a year and a half ago, the year 22 and 23, all these different patterns are coming together. We're going to have a horrific crash, probably worse than the 29 recession or depression. I'm just waiting.
Right.
And all these cats that are cocky and they got their head in the sand, or they're the biggest things in sliced bread. And I've been there. been humbled more than once,
Right.
there'll be opportunities. So
Exactly.
and I might jump in Phoenix, I might go into notes. I don't know. Am I going to go into non-performing notes? I don't know, because you don't know what's happening, which way the wind's going to blow in DC
Right.
with the powers to be without going in. I mean, whether all foreclosures are on moratorium or forfeitures are on moratorium or this or that or whatever. It's like, come on, man.
Right.
And there's going to be a lot of hurt people out there. Yeah, there's a lot of notes in default now, but again, I want quantifiable returns. So when we were buying back in 13, 14, 15, we were paying 25 to 30 cents of 25 to 30% of the unpaid balance. When they were buying seconds at that time, they were paying a nickel and a dime.
Mm-hmm.
So why pay more?
Right.
Just like you said on the outside of our interview, you make your money on the buy.
Yep. Exactly.
Just sit around and pick up the pieces.
Yep. Yeah, it seems, just from my perspective, and I'm not as involved in it as you are, but it seems from my perspective, like you said, it's just being sucked up at 95%, and people are just paying outrageous prices for, I mean, almost 100% of UPV. And it's just like it's scaring me, which, I mean, obviously for us, we're kind of liquidating our stuff, and it's good if you understand what's going on. But for people that are getting new and kind of getting new to note investing, and they just think, oh, let me go buy this because everyone else is buying at 100%, it kind of makes me feel bad for them, and like, man, you gotta reel it in.
I mean, you can follow the Pied Piper over the cliff. That's all good.
Right.
It's not me. But I mean, when the last large tranche of notes that I bought, they were all leftovers from hedge fund, and they had $15,000, $10,000 balances. I was paying 30 and 35 cents. This was just 2 years ago.
Yeah.
So that was a
Yeah.
great buy.
Oh yeah.
And I did it all in my IRA. Of course, now they're going after
They're
those
talking
dollars,
about
feds.
changing that now, right?
That's
Yeah.
right. So you got to flow and pivot, or the term I use is rebalance, or whatever you got to do. But if
Right.
you're not, you're going to get toast. It's just, it is what it is.
Right.
I mean, in your house buying in Louisville, are you, so this is all valid for what you're looking for. Now, if a house is worth 50 before you walk in, you have to assume there's going to be repairs done, right?
Right.
And you're going to discount off of that. What's the old ratio? 70%, and then
Yeah.
back out repairs. Okay, so what's the
Right.
difference if I'm buying a performing note? If it's worth 50 and the UPV is 40, and you're willing to pay that, what if they go upside down? Who's going to be left holding the bag?
You are.
Not me.
Well, you're not going to buy it, right?
And in my YouTube channel, I have I guess it's a longer session. It's like, I think it's 18 minutes long on due diligence.
Okay.
And I learned that through Note School, through Kevin Shortell, and it's basic. As a matter of fact, Eddie Speed laughed at me for my filters. He said, "You'll never buy anything." Okay,
Which is, yeah. I mean, Eddie Speed is the man, right?
he
Which
is. I
is,
have a lot of respect for him. But
yeah.
again, you've got to have what is your risk tolerance?
Right.
And if you're, at my age, I can't recover anymore. It is, you get slapped, you're done.
Sure.
At your
Sure.
age, you're what, 30, 25, whatever?
Yeah, I'm 25.
You
Yeah.
got plenty of time to recover.
Yeah. But I still want to, I like to keep things
Of course.
rolling,
Yeah.
So, I'd rather just do it right once.
I mean, everybody's going to get humbled in their life at one time or another. It's going to happen.
Sure.
It's just, and if you're a legend in your own mind all the time, yeah, you'll be a legend, but not, I don't know for what.
A legend for being humbled, right?
That would be true. I've been there a couple times.
Yeah, there you go. So yeah, no, but that's really something I think that plays into note investing. Like, I see a lot of podcast people out there that talk about, do this for 2 years and then retire, or people always want to do things very quickly, right? And that's more of an American culture. And I think that, like, even me being a young guy, just I think that's foolish. I mean, it's like it takes time, and
It
especially with the
does.
notes, like you got to be balanced, you got to be careful. Just like you have to have that criteria for which you buy. I have to have a criteria for what houses I buy, kind of like we were talking off the call. There's certain states that we just don't want to get into. And I'm even a little bit more reckless with that buying in Illinois. I think you said that, you kind of don't like to invest in Illinois as much just because the tenant buyer laws and all that. But you have to be careful. But yeah, I mean, what states are you kind of
I found out,
geared more towards for notes?
fair question. Yeah, this came over a period of time, talking to others, listening to people on the various conference calls. What evolved for me was I stay away from Maryland, New Jersey, north, including PA, and now Ohio, because Ohio is not investor friendly. So anything north of that, I'm not going to go. Okay. Um, Indiana's phenomenal.
Indiana's good.
Kentucky, if it's a contract for deed, well, then you're back in the regular realm of it being a mortgage.
Right.
Illinois, well, you can see what's going on in Chicago and where that liberal left-wing crap is. I don't
Right.
trust it.
Right.
Milwaukee, which is where my family's from initially, it's too liberal.
Right.
Minnesota, forget it. North Carolina, there's certain, you can't service your own product. You're going to be wearing stripes. In
So so what do you mean by that? You have to have like a note servicer do it for you
which you
then?
should have anyway.
Right.
And then there's certain laws on how many you can own. The same thing in Georgia. Georgia's fine.
Yeah.
Louisiana is Napoleonic law. Um, what else? Florida, you like hurricanes? So you start just filtering these through.
Right.
And you can definitely say never, because maybe that particular note, it's a home run.
Sure. Sure.
But and
It
now in
always.
Michigan, you got the whacked out politics there. I mean,
Sure.
they would have the longest lockdown forever. It's
Yep.
like, no way, not going to fight
Yep.
it. Life's just too short. And yes, is that controversial? Yeah. And do I trust the left? Absolutely not.
I don't think anyone who's a smart investor, who's a capitalist, really does, right?
You'd be surprised. A very prolific investor in seconds. I'll say this carefully, from the West Coast. More power to them. That's all I can say.
Right. Right. Right.
And
Well,
then
I
the
was
other
just
thing
talking
that
to.
Joe mentioned, the other thing that's really important, servicers are the weak link in the note business, the absolute worst link.
Yeah. Why do you say that?
They don't get paid a lot of money. You're relying on them to do what you want them to do. They don't follow up. They don't follow through. Even the good ones, or supposed good ones, are getting 35 and 40 bucks a month on a small note. It kills your yield.
Hmm.
Then you got the FCIs on the West Coast. It's like moving the Titanic. Then you got some that are just ignorant
Right.
without, I'm choosing my words here. So
Right.
and some, they say they know how to service partials. They don't know nothing. And then you got to work your way out of it. There was one supposedly better servicer in New Jersey that they're now in Reno. They were servicing a partial. I knew it was wrong. He just let it go. There was another servicer in the Northwest. They said they could service. I was at a Note Expo, and they said they could service any state. Well, then I said, great, I'll move everything to you. So I find
Mm.
out 3 months later, they can only do 10 states. And they said, oh, by the way, you have to deboard all these.
Oh my goodness.
Yeah. So there's only a
Wow.
few servicers that'll handle North Carolina.
Hmm.
Allied is probably the best one for partials, bar none. But then you got to get through their nuances there. And
Right.
if you want to, like one of the notes that I bought in Texas, I knew it was going to be bad, and I bought it because I knew it was going to foreclose, and I loved the spread because I had also got a deed in lieu with it. So I got a $70,000 bump in the back end, but they were pushing back. They said, if you service this yourself, then you can get around the Dodd-Frank stuff. So I deboarded it. And now I'm going to be servicing that myself so I can move forward and do what I want to do.
Okay.
But also, it's really important to develop a network of people. Then that's
Sure.
what I got out of note school. The network that they gave me was just that you could cultivate was just over the top.
100%. You know, just like I was speaking with a few people earlier about how fragmented the note industry is. You know, I think there's like a lot of, you know, obviously rentals, fix and flip, all that stuff is pretty normal for most people to get into with real estate. That's the first thing people think about. HGTV, fix and flip,
Right.
name it. But note investing, it's really a big market, but it's so fragmented. And kind of to point out what you said, it's hard to vet people because it is so fragmented. You know, people out there saying we service all 50 states and then they only do 10. And so yeah, you know, building that community of people who have done deals, do deals, and then can kind of guide you, because you're not going to learn this just from reading blogs or even listening to podcasts. You have to
Right.
get out there and meet people, because it's
You
just
can learn a
such
lot that way.
fragmented.
And had a Kevin Shortell been around back in the day on his own, I would have gone there.
Sure.
And again, I mentioned Tracy Rui at Diversified Investments. She and her husband Fred, they're top shelf. She goes by Tracy Z
Okay.
as a zebra. They're very good, very straightforward. She's the one that did my capstone site, the websites. They do a lot of internet marketing and stuff like that. Great
Sure.
people. You can trust them for as long as a day is. It's just they're really, really, really good people. And she and Melissa Bollinger, Melissa owns Allied. They used to be together back in 1985 in the note business, in the servicing end. So whether it be Kevin or whether it be Tracy, it's a different model. Kevin's more hands-on and Tracy is more put them in a group and do a group call, a Zoom call.
Right. So let's talk a little bit, you know, if you can, you know, kind of how I commented on, you know, note industry is extremely fragmented. How do you source your deals? I know there's not one answer to it, but I mean, you know, using Facebook, PaperStack, referrals. I mean, what's your main source for your deal flow? I know we talked about we're kind of not buying
There was a
anything right
gentleman
now.
out of Idaho, and he was brokering notes from your Harbor and Window Rock and whatever. He brokered like 15 or 20,000 notes. So I got that source and I just kept working with him. Okay.
Wow,
So,
20,000.
but I would go to conferences if you can fly there now.
Right.
That would
You
be
can
a
fly.
great place to go. Am I going to go now? No, because I'm not going to fly. But
Right.
but beyond that, like, you know, Eddie Speed's got his Note Expo in the first week in November, just a couple weeks. There'll be some good stuff there, and he'll be getting into a lot of seller carry, you know, wraps and things like that. And that's where he sees the market's going. But that's his marketing focus now, so he can get his mentorships. Now he's selling mentorships. It is what it is.
Sure. Yeah.
And they're not cheap.
Right.
They're not cheap at all anymore. You know, it's 40,000 tonight or it's 50,000 tomorrow.
Exactly.
So beyond that, it's just going to the different events and connecting. That's the best thing I could suggest, is just doing that. That's what I did. You know, so
Right.
whether it be Expo or Noteworthy, Paper Source we talked about, Bill Mancaro's thing. He usually has those in Vegas. Again, I don't know what they're doing now, but you can meet some good people there. And you never know who you're gonna meet.
You have your own forum as well. Is that's still active, or you
I
used to
did
run
until COVID.
Okay.
And then we did it virtual, and some of those recordings are on the web, on the YouTube. And then people said, well, let's go back to do it in person. I said, yeah, I am not going to talk to somebody with a medical device over their mouth.
Right.
You and I, we're on Zoom right now.
Sure.
It's hard to sell. It's hard to communicate if you got that
With,
muzzle. Can't do
exactly.
it. I said, no.
Yeah.
But what's ironic is, Joe, a couple guys that I've known for a while, they're my age. They said, where you been? You okay? I said, yeah. I said, well, why don't we got this stuff going on. Why don't you go to your group and let's get some kind of a mastermind going? I said, okay, that might be interesting. And then another gal called me or texted me a couple of days ago saying the same thing. So I had developed this community over a 5-year period because we were getting 50, 60 people there at an event.
Sure. Yeah, that's impressive.
So that was good. So I would find meetups, start your own meetup once you feel comfortable in presenting. That's what Speed pushed me to do. And I learned more from that than ever, but then you develop that relationship with these people. Like the self-storage that I've got in Maine, my 2 lenders came from my meetup.
Nice.
So, I mean, it's all
Interconnected.
incestuous in its own way.
Right.
Maybe I'm not
Nice.
using the terms you want on a podcast, but it is what it is.
No, this is unfiltered. I like it. We get the truth, you know. I think most people
And I'm
try
not
to-
holding back here. It is what it is.
Right.
You know, and
Yeah.
frankly, the note business really forced me to grow as a person and get outside my box. Doing the meetup forced me to get outside my box. But the other thing is, if you sit back and you watch all the time, you'll never get anywhere. Like of those 2 investors that called me last week, one of them, he'd been underwater for a long time with some houses in Casa Grande. Now, with the upshot, he's now healthy and then some. I said, so how many have you sold now that you want to liquidate? 3. I says, well, how in the hell are you going to get free of what you don't want to be in anymore if you're just trying to pull off onesies and twosies? I can help you to market those 14 leftover Phoenix assets. That's another little tip for your listeners. I'm doing that. I've got that list.
I got you. So you're actually helping people sell notes then, or get out of that,
Or sell their REO portfolio, yeah.
Okay.
Or somebody who wants to do seller financing and they don't understand how to do that, I can help them with that.
Oh, so that's even better. So like, let's say I own a second rental property or something like that, and I don't want to sell it on the open market, can't sell on the open market. I can come to you and you
Yep.
could help me.
Yeah.
That is awesome.
Or if there's an existing mortgage and you're doing your marketing, your dog and pony show that way, I can help with that wrap. I understand it. I mean, the first subdivision I did in Maine, that was in the 84, 85. My daughter's mother saw this house. I said, okay, I'll go knock on the door. Turned out they had it was an old New England Cape with a barn right next to I-95. So we talked and I ended up splitting out the house in 5 acres and did an FHA with 2% down. And then the guy took back paper on the balance. And with that, I did a subdivision. So that subdivision was all on seller carry.
Wow. So you did a whole entire.
Yeah.
That's
Yeah.
impressive.
So
Yeah.
I got, like I said, I got the house in 5, then I split that out in Maine Savings Bank at age, 36 I was at that time. They gave me 100% loan to build out the development. I didn't know anything, but I bought it right. And I bought it I didn't have any money. I wasn't even a licensed agent. I had no cash flow coming in, but I still got that FHA loan. But my point is the big piece of it I did on seller carry.
I got you.
And
That's
then the
amazing.
last lot I sold on seller carry. And I got creative. I said, okay, Carrie, I'll sell you this. The interest rate is 10%. If you pay me off in the first year, I'll forgive your interest.
Did they pay off in the first year?
Yeah.
Oh, wow. So
So you got to get outside the box.
Exactly. I
And
think
I've
that's
never
really
done one like that before, ever.
right. I think that's really one of the things that people don't know. People think about conventional lenders and what the bank tells them they can and can't do, and they kind of push themselves into that box. They don't really understand how creative you can get with the seller financed. For me, when I want to do a deal, you don't always want to have 10% down on the deal. Most people can't afford 10% a lot of times right away, depending on what the condition of the house is, what location. So I can split that up, say, hey, give me, half of that this month, give me the next half, 2 months down the road. Some people don't like that. I do it like that, but other people, just as long as that equity is in the property, they're fine with it, as far as people buying my notes. So it's unbelievable how much creativity you can really have with the note investing space, and it makes it easier for the buyer.
But here's a caveat of that, or a hook. So let's say you do a deal like that today. And then you do it with a mortgage or contract for deed. I don't know what's allowable in Kentucky anymore.
So yeah, I mean, typically I'm doing these in Indiana, so it's going to be land contract. But
Okay, all right. Well, then
yeah,
you're gonna have a clause in there for forfeiture. And if they don't pay on time, then it reverts back to a rental and they're gone,
right,
or could, right?
right,
So that's okay, that works. But if you get into it and then let's say in a year the market drops 20%, where are you with your buyer? You're screwed.
they, yeah, they don't have any equity.
Nope, nope.
Which goes back to kind of what we said with what we said earlier. As far as me buying a property, I got to make the money when I buy the property, right?
Yep.
So, once again, kind of talking about like, you're not buying any notes. I'm not buying as many houses as I could be or would have been. There's still deals out there. There's still, I mean, I don't know what area you invest, but I'm in that, $20,000 to $50,000 range.
That's not in Phoenix.
Yeah, right. With smaller towns in Indiana, but so typically, but the same thing. You gotta make the money when you buy. So if you have that, if you're making 40% when you buy,
Right.
it's fine. It's fine.
It's all good.
But
Yeah. So it's not rocket science. You got to follow your gut. We're in the sales business. If you can't relate or you don't trust those folks, you get out. If you don't
right,
pull a credit report, shame on you.
right.
If you don't do
I
a
think that was
verification, huh?
Yeah, no, I think that was another thing that we kind of talked about is people who make these land contracts and try to sell these notes without using a mortgage loan originator,
Oh, you got
or
to do that.
they just pull. You give me the cash and here you go, here's your property, and they don't really do any verification, and you have all these bad notes out there, and it's just
Yep.
it's horrific.
Now, here's another tip for your listeners. I bought a note in Redford, Michigan, which is a suburb of Detroit.
Ooh,
Okay. Nice area.
okay,
Okay. The note was originated in 06. It had 11.5% interest rate, and the balance was $1.50. They modified it down to 20 with a carve out. If you payer goes backwards, there's a right of rescission. It reverts back to the original unpaid balance.
wow,
This lady had been playing with me for 3 or 4 years. I finally said, screw it, I'm done. And I did it. I did the reversion.
hmm
And then, so that popped that up there. My investment was not that much, but because of that, because of the back end spread, I was able to flip it and do well. And then I sold it too cheap, apparently, because somebody else flipped it again and they paid high dollar for it. That works for them, but it was all a
yeah,
win. But my
yeah,
point is, if you're going to do a mod when you're buying like that, or if you're doing a wrap with a mod, and just go into the old terms, take it backwards. If you're buying a note and they're late, like a lot, say, okay, we'll bring it current, but we're going to do something that's basically called, we'll do a deed in lieu, but we're holding escrow. Check with your attorney on this. I'm not an attorney.
right,
And if you, Mr. Payer, you don't pay, we're going to give you notice and we're going to record that. So the one note that I bought a year and a half ago in Texas, it was a zero. This is another decent example. It was a 45,000 UPB, unpaid balance. The house was a double wide on 4.5 acres, was worth $1.10, zero coupon rate, interest rate. I bought it for 25 and the guy was 5 months behind. So he brought it current, that's $2,500. I said, I'm only gonna accept that money is if you sign a deed in lieu of foreclosure, which means that I don't have to go through the foreclosure process and I don't have to worry about other people bidding it. So now my goal is, and this is coming up, that he did bring it current just 2 weeks ago, but he's got some back end stuff that I put on there. I want him to go 45 days. I'll get that house and I'll have a balance of 20 and I'll resell it for $1.25 because it's now worth 150.
wow. So he was behind, and you said sign the deed in lieu, and you're going to forgive the debt, or it's
No, I
going.
just said, I will accept your money if you sign a deed in lieu or modify the loan with a deed in lieu and foreclosure.
I see.
If I changed the terms so he would pay the servicing fees and that we added a late fee because there was no late fee tied into it.
Right.
And he's playing with me. It's
Yeah.
kind of very irritating, to be polite.
Sure.
But I'll get him. You know, again, I knew he was going to go south. It's just a matter of time. And he was playing the system. And that was one where Allied said, if we continue servicing it, you got to play by these rules. If you do it yourself, you have another set of rules.
Right.
So I thought that's the first note I'll ever be servicing myself. And that's in my
There you
app.
go.
Yeah.
Is that the most irritating one? Yeah.
Yeah, because he knows what he's doing. He's just
Yeah. He's too good. Right. Eventually you'll get him though, right? He can't outsmart.
That's my goal. Yeah.
Yeah. Can't outsmart a fox, right?
Yeah. But I mean, but overall, if you treat people fairly from the get-go, you're fine. And they'll
yeah.
But if they start jerking your chain, then you just say, it's all over. There's no, there's no compassion anymore. I don't care.
Yeah. Same thing on the sell side, I just do a few deals a year, but finding that person who has like a legitimate interest in buying the property, not something that just, I'm going to live here for a year or 2 years. You can kind of tell after you start, working with them if they really want to own the property. And same thing, having that compassion. Sometimes I've had, during COVID, I think there was one lady who she was behind maybe a week. She said, I can pay you in a week, and I could have charged the late fees, but it's fine. It's about having compassion. I was just happy I was getting paid,
Right.
with during COVID and all that. So yeah, that's a huge element of the business. Always making sure that the seller or the buyer wants to stay in the note and make their payments, because that's the set it and forget it mentality of what we're trying to do.
Right. So it's just, you have to, like I said, you just have to be fair. And
Right.
that's it. But don't ding me. And with investors, if I'm working with them, the same thing. Just be fair.
Sure.
That's it. And I think that's as good as it gets.
So this is one question that I always like to ask everybody, just to have a little bit of fun.
Okay.
Let's talk about your best deal and your worst deal, if we can.
And notes, or just generically speaking?
In notes. I mean, I know you've done a lot, so
I'm Pete Rose. I just do a lot of singles.
Okay.
My best deal will be this one in Sadler, Texas.
I got you.
That'll come. The other one's 10, 15, 20, 25. Not a big deal. Worst deal, up in South Bend, Indiana. I bought a couple of non-performers there. And actually, there was also one in Warren, Ohio. And when you're working with contractors, you have got a target on your forehead when you're out of it. You are a sucker.
Mm-hmm.
So to that point, I think between Warren, Ohio and South Bend, I probably dropped 35.
Yeah.
Especially the one in Warren, Ohio.
So were you just trying to fix them up to resell them, or?
I bought an NPN, non-performing contract for deed. I foreclosed, got the property, hired. Actually, there was two in Warren. Ended up using the same contractor in each situation. Shame on me. And it just kept cycling. It was like, how do I get out?
Right.
So finally, the last one, it was in my IRA. I had a rental. COVID hit. We turned it into Section 8. I shouldn't have turned it into Section 8 because I lost the upside to an outright homeowner.
Mm-hmm.
Got rid of it. I dropped $6 on it. I probably lost $7,000 on that, just on the value. But it was just not good. The other one I did with a partner. She had bought a note with me. We foreclosed, and that contractor, it was all going on simultaneously. They probably clipped us both for, like I said, 35, 40, something like that.
Wow.
It's just, and then even the trash out people, they misrepresented how much trash they took out by cubic yards.
Yeah.
And again, you're not there in developing the network.
Yeah.
So I guess that just leaves a big lump in your stomach. And it's like, no, I don't want to go there anymore. It's just not worth it.
No, no.
I
Yeah,
want to control my
managing,
game.
right, managing remotely, not with the notes, but with just with the contracting or even having like a rental property management company is tough. I know a lot of people who get just hosed by rental property management companies, you know, who have the rentals. Oh, this needs to get fixed. This needs to get fixed. Never do the work or what have you.
Right. Right.
But
Right. So I mean,
well,
it's just it is what it is. If you don't have a bad deal, or somebody says they've never done a bad deal, they're lying.
they haven't done any deals or haven't done
Or
enough,
they're
right?
lying.
Yeah,
And that does happen, of course.
sure, sure. Well, all right. This was a wonderful interview. I appreciate you coming out and sharing all your knowledge with us today. I think that pretty much sums it up. That was a great explanation of really kind of what's going on in the market right now, and you know, hopefully, you know, we're going to see some success, and everyone will be able to weather the storm, invest intelligently, and not lose their
Right.
minds as everybody seems to be doing right now. And yeah, Dave, I really appreciate you coming on, and I'll share links to all your content. And you also have a lot of free content I noticed on your website. I think it's like
I
a
do.
checklist, and yeah, you have like a checklist for
Yeah,
notifying and
that's a very good point. You have to opt in, and yeah, I'll snag your email, and yes, you'll be on my email list. It is what it is, but I'm also
hey,
getting a
it's
lot
worth
from
it.
it too.
Yeah, yeah. So you have a lot of free content. So make sure everybody listening to this goes and checks that out. Dave knows what he's doing, and you know, he's a clean cut, no nonsense type of guy, which is why I'm glad to have you on the show. And I really appreciate you joining with us today, Dave. If there's anything else you'd like to add,
Yeah, on that same site, I have 4 notes in the note vault.
so you're selling those notes or
Yeah, they're
okay,
on there right
okay,
now.
great, okay, great. So yeah, people can check that out as well.
Yeah, and it's well laid
Well,
out. So for a new investor, it lays out all the variables that are the most important things to look for on a cursory
beautiful.
view.
Beautiful, beautiful. Well, sounds great. I'll be sure to add that link at the bottom of this video.
Yep. Okay. Good deal.
All right. Thank you,
Thanks,
Dave. It
Jeff.
was an honor as well as a pleasure. You have
Thank you.
good rest of your day.
Take care. Bye.